A very good afternoon, Madam Omaima and my fellow friends. Today, my team representing about Islamic Financial Service Act 2013. So, first, let me introduce my team member. First, Aisha, Irisha, Marisa, and me myself, Kitini Vijaykumar. So, as per the content, we are explaining about the Part 5 Potential Requirement and Part 7 Financial Group. So first let me explain the part 5 potential requirement. The dividend 1 standard on potential method. Power of bank to specify the standard or potential method. The bank may establish potential requirement to promote institution that strong financial condition that as well as honesty, professionalism and experience in the conduct of institution business. So standard specific they may include standard related to capital adequacy, liquidity, corporate governance, risk management, related parties transaction, and preventing an institution from being used intentionally or unintentionally for criminal activities. If the without limited the generality of the subsection. So, related party transaction means transaction with an institution involving director, officer, or shareholder of the institution. A member of institution of Sharia community or a person in a position of influence or control the institution or affect its decision. Next is institution director and officer to comply with standard. As every institution will have to comply at all the time with standard specified by the bank that are applicable to such institution. That ensure that internal policy and procedure are consistent with the standard specified by the bank and is managed well with the business whether or not its standards have been specified by the bank. Every director and officer of the institution must be follow the institution, the internal policy and procedure at all the time, that including internal policy and process to implicable the requirement established by the bank. Next is single counterparty exposure limit for licensed person. If no licensed person will have a single counterparty to expo that exceed the level established by the bank. An export to a single counterparty referred in the including any group of individual related such single counterparty, but it does not include any exposure to or specifically guaranteed by the bank or government. So bank may define as a connector, counterparty or exposed for the purpose. Last but not the least is restriction on payment of dividend by licensed person. When a licensed person is applied for approval in respect of the proposed amount of dividend to be declined, the bank shall consider the licensed person exit in a future financial condition, that including the ability to pay dividend, and in determining whether or not to guarantee the approval on the proposed amount or propose the deduction amount a dividend payment. So as the next, dividend to corporation governance. So chairman, director, and CEO is known as a chief executive officer of an institution. So every institution will have the CEO. That like the bank will proceed with written approval. If no licensed person will appoint or reappoint, so, as a person, as a chairman, director, or CEO, and no one will accept a licensed person's appointment, election, or reappoint as a chairman, director, or CEO officer. So, the licensed person will submit a written application to the bank along with document, papers, information that the bank need to be approved. So an approval person or operator of a designated payment system must be notified the bank in writing of appointment to re-election of chairman, director, CEO. So and in this case of approval, Islamic financial advisor, it is representative within 7 days or such other period. So as a bank may respite. Then together with the such document or information the bank need to be acquired. So next is requirement to be chairman, director, chief executive or senior officer. So an institution will not appoint or reappoint or reselect any person as a chairman, director, CEO or senior officer. But unless that person is individual that is not disqualified and has to meet the fit and proper requirement that specific by the bank. So no person else shall accept any appointation as a chairman, director, CEO, or senior officer of an institution unless the person is not disqualified and be compliant with the fit and proper requirement as bank state. So unless as approved by the bank as a CEO of an institution will be have to his principal or executive's place of residence in Malaysia and dedicate his whole professional time to institution service. So, as the fit and proper requirement is without limiting the genitality time to the institution. So, as the purpose of the ban may specific the fit and proper requirement to meet by chairman, director, CEO, or the senior officer of the institution or Islamic financial advisor representative, so which may include minimum criteria to related to project their personal integration and reputation. So if a question arises to whether a chairman, director or CEO, senior officer or Islamic financial advisor representative have to meet the fit and appropriate standard, so the bank will be completely authority have the authority to solve the matter. Last but not least, duty of director. As a director of an institution, we always act in good faith in the best interest of the institution, exercise the realistic skills and delegation with the knowledge and experience that could reasonably be expected of a director with the same responsibility and experience that the director has, and also exercise the power of conference on him of the purpose of institution. So this applicable in additional to not to derogation of any written status or rule of a law that related to a director duty or obligation. So any director who violently commit any profited or any crime, if they guilty face need to face the imprisonment of a term of not exceeding more than 8 years or need to be fined not more than 25 million ringgit or be charged both. That's all from me. Thank you. I pass to next presenter.
Okay, thank you, Kitini. Now I will present the Division 2, which is cessation from office. A chairman, director, chief executive officer, or senior officer of financial institution shall immediately be ceased to hold office. This is because they no longer complies with criteria that fit proper requirements and becomes disqualified. The case may be affect the financial integrity and the reputation until the directors become disqualified from office. For example, the issue and scandal about ex-chairman of Tabung Haji, which is Datuk Sri Abdul Aziz Abdul Rahim, that involved in corruption and money laundering in the government projects. Um, If the board of directors may involve the case that not meet the requirements, the institution shall immediately terminate the appointment and remove the chairman or board of directors from the office. They also not be entitled to claim any compensation for the termination. So, the institution will notify the bank in writing of the fact that a person has ceased. The case may be processed within 7 days from the date of the cessation in order to determine the issue or to process the reasons for the termination. Then Division 3, which is transparency requirements. Transparency is important elements in institution where the access and proper disclosure of financial information, such as an institution audited financial reports. An institution should maintain the proper accounting records and information such manner as enable the institution to prepare sufficient financial statement in order to allow them to be conveniently and properly audited. However, an institution shall prepare its financial statement in compliance with the approved accounting standards that may be specified by the bank. An accounting standard is a common set of principles and procedures that define the basis of financial accounting policies and practices. For example, companies registered in Malaysia are required to prepare financial statement in accordance with the approved accounting standard that issued by the Malaysian Accounting Standards Board (MASB). Meanwhile, for foreign companies listed on a stock exchange in Malaysia may prepare financial statement in accordance with international accounting standards such as International Financial Reporting Standard (IFRS). MASB approved accounting standard for entities which is MFRS framework. This MFRS is a fully IFRS compliant framework and equivalent to IFRS that enhance the quality, credibility, and transparency of financial information. So, an institution must publish its financial statement in accordance with approved accounting standards from time to time and must be audited before publish the financial statements in order to avoid any accounting error happens. Okay, next. Auditors in Division 4. Every institution shall appoint an auditor for each financial year who meets the qualification and requirements of the bank. An auditor has to audit the financial statements, documents, and data of the financial institution by review and summarize it in a report in order to ensure they are in compliance with laws and accounting standards. For instance, an auditor has to assess an institution's financial reports and analyze the information from wide range of financial statements, include the institution's financial activities, affairs, business, risk management, and procedures to make sure that all related information is complete, timely, and accurate. Then, an auditor has to submit the audit reports to the institution and the bank. The duties of an auditor are not only review the financial data, but they ensuring that no fraud or error are present in the institution. Nonetheless, an auditor has to report to the bank immediately if they found there has been breached any provision of this act or non-compliance of the accounting standards that may be affect the financial position of the institution. Other than that, if the institution involves in fraud or dishonesty which can break the law and may be affected the investment of investor, the deposit of customers, takaful holders, and others. Therefore, an auditor has to report to the bank immediately so that the bank can take an action against the institution. Okay, next. Appointment actuaries by licensed takaful operator in Division 5. Okay, every licensed takaful operator should appoint an actuary such as family takaful business or general takaful business that carried on by the licensed takaful operator. Okay, an actuary is a professional who specializes in the field of analyzing financial risk by implementing statistical, financial mathematical theories, and problem-solving skills. So, in takaful business, actuaries can assess the risk which help the institution in the estimation of premiums for their policies. Therefore, an actuary is important in takaful business that can help enhance the business plan for the future because they can manage risk by analyzing the potential for undesirable events to occur and helping to plan to avoid those problems. So that's all from me. I will pass to Marisa.
So thank you, Irisha. Now I will continue on the next part of Division 5, which is the appointed actuaries. So the first one is appointed of actuary by bank. So as Irisha stated before, every licensed takaful operator must appoint an actuary. But in section 84, it states that if the licensed operator fails to meet the requirements of appointing a person who is qualified to become his actuary, the bank will provide one for him. So as a result, the licensed operator has to bear all the expenses in appointing an actuary for him. The second one is duties of appointed actuary. These appointed actuaries must exercise its responsibilities and functions such as accepting and applying all actuarial principles and practices, being capable of making suggestions and recommendations to the board on any relevant distributions, and put themselves through appropriate tests to assess their ability to carry out the duties of an appointed actuary. So the third one is actually I combine between two sections, which is 86 and 87. So cessation as appointed actuary and notice of cessation. A cessation is considered valid if the appointed actuary resigns from the position, termination of appointment by the licensed operator, or the person is deemed to no longer meeting the requirements and do not possess the qualifications to carry the position. The person shall notify the bank in writing with appropriate reasons not later than 7 days from the date. So after the cessation process, the license operator is responsible to find a new replacement by appointing another person to become his actuary not later than the date of the cessation. So the fourth one is information to be provided to appointed actuary. So a licensed operator is responsible to provide actuarial information within his knowledge and experience to its appointed actuary as to prepare them for the position. So the knowledge and skills provided must be accurate, complete, and free from false and misleading in any material. And the last one is qualified privilege and duty of confidentiality. So the appointed actuary is not responsible for any unethical acts committed, such as a breach of duty of confidentiality between a licensed operator in relation to any reporting to the bank or the discharge of his duties. So moving on to the next division, Division 6, which is the Takaful funds and shareholder funds. The first one is establishment and maintenance of Takaful fund. So a licensed operator is permitted to establish and maintain any Takaful funds, which is more than one, regardless of their class or business description, but they must keep them separated from the funds of its shareholders. This is because Takaful fund and shareholders fund cannot be mixed together because two of that is from different sources. So a licensed operator must manage those two accounts separately. The second one is requirements relating to Takaful funds. So the licensed operator shall be the person to manage the Takaful funds in accordance with the Sharia. And the management must be on behalf of the Takaful participants and is obligated to prioritize their best interests, such as maintaining all value of assets higher than the liabilities and applying the suitable assets to meet with the expenses. So the third one is requirements relating to shareholders fund in respect of the Takaful funds. So a licensed Takaful operator must comply with any requirements pertaining to its shareholders fund that are relevant to the business to which a Takaful fund or Takaful certificate relates. And the bank may also determine of what constitutes in and the value of receipts, income, asset, liabilities, or expense based on the nature of business of the licensed operator. The fourth one is withdrawal from Takaful funds. So Takaful funds that contain any surplus are not to be withdrawn by the licensed operator unless it has fulfilled requirements by the bank, such as the withdrawal does not affect the sustainability of the fund to meet its liabilities, and the interests and expectations of Takaful participants have been considered first. So the next one is deficiency of Takaful funds. So if the value of assets in a Takaful fund is less than the value of liabilities, the licensed operator is responsible to provide other financial support like card from the shareholders fund for an agreed amount on such conditions from the bank. And last one is assumption of risk, which the licensed operator shall not assume a Takaful fund is at risk until the Takaful contribution payment is received by the operator itself. So if the payment has been made, the licensed operator is obligated to provide a receipt as a proof of the payment. So that's all for me. I will pass to the next presenter.
Okay, so now I will present the part 8, which is the financial group under IFSA 2013. Okay, so next. Okay, so the purpose of this act is to show that how the bank have this power to approve and also overseeing the financial group in order to promote the safety and soundness of the licensed person. Okay, that's a little side note in which in section 122 and 123, it will not be applied to the licensed persons or financial holdings under IFSA 2013. Okay, first is for section 122 in which application to be a financial holding company. So the people that must submitted an application to the bank to be approved as a financial holdings company will be any applicants which are a company or a person that obtain prior written approval of the minister and also hold an aggregate interest in shares of more than 50% in a licensed persons, or if the applicant that I mentioned just now propose another company within its corporate group to be approved as a financial group as well. Okay, next is for the section 123 in which bank have power to require application form. So this can be done if the bank feel it is necessary for the purpose of maintaining effective regulation and supervision. So bank can require any other company other than the one that the applicant requests if they have an opinion that neither the applicant nor the company that the applicant proposed should be approved as a financial holding company. So other than that, if a company has an aggregate of 50% or less in the licensed person. Okay, next is the approval of application as a financial holding company. Okay, to be a financial holding company, the person or the company must submit the specific documents that the bank required. Okay, next, the bank will then assess the company's application in order if they met the standard that the requirement that the bank has set up. If the bank satisfied with the application, bank may approve the application with or without condition. And if the applicant does not fulfill the requirement, bank will reject the application. Bank can also create new condition in the approval and also reject some of the condition in the approval without giving any bad effect to the overall situation. So any decision or the modification will definitely be notified by bank to the applicants through writings. And lastly, if the bank haven't approved or if the bank reject the application, the applicant should not carry any financial business or equivalent to it. Okay, next is, so bank will specify the standard requirements to ensure that there will pose no risk. So if breached, this means that the bank can take further actions. So bank have the power to issue new instruction if the CEO or the director of such financial holdings company, if they commit a breach and fail to comply with standard requirements posed by the Act of Provision. So the type of instruction includes cessation of any act related to financial business, such as termination of agreement and also disposal of asset. Okay, other than that, instruction to increase capital by the bank and also subscribe to shares that must be done by the financial holdings company and their members that was specified by the banks. So if still the companies breach the new instruction by the banks, penalty will be executed. For example, penalties such as prison, maximum not more than 10 years, or fine maximum of 50 million ringgit, or both. Okay. Lastly is the removal of the director or CEO of the financial holdings company if they are no longer able to fulfill the fit and proper requirements specified by the banks, or they have failed to comply, and if they perform any negligence that can contribute to the breach of the Provision Act. So once the the CEO is removed, they will no longer have any concern regarding the business affair, and also they will be given no compensation upon the removal. So I think that's all from us. Thank you so much.